What if I told you there's a billion-dollar mistake so dangerous, it once torched more cash than NASA's annual budget? And top investors still fall for it today. It's the same psychological trap that bankrupted a $5 billion startup before it made a single dollar. And unless you learn to spot it, your money could be next. I've broken down this failure from the inside, studying exactly how brilliant minds made irrational bets. And I'll show you the signals they missed. Stick around because by the end of this video, you'll not only know how to avoid this $1 billion mistake, you'll know how to spot the next doomed startup before it burns your cash too. If you're the kind of person who sees business as a battlefield of ideas and wants to sharpen your edge, then this channel is your strategic advantage. Welcome to the Wealth Project, where ambition meets opportunity and your journey to wealth and luxury living truly begins. Here, we deconstruct the playbooks of the world's most successful so you can transform your future. If you're ready to elevate your life, subscribe, follow, and ring the bell so you never miss a masterclass. Welcome to the exclusive club, where you don't just watch, you learn to win. Your next lesson starts now. This video isn't just about Webvan. It's about a dangerous mindset that kills businesses and wipes out investors, one that's still infecting startups today. In 1999, Webvan raised $375 million overnight with a $5 billion valuation, but never proved their idea worked in a single city. What killed them? Not the market, not the tech, but a fatal mental blind spot that still burns through millions in the AI, crypto, and delivery space today. The Infrastructure First Fallacy. To understand how Webvan became a billion-dollar bonfire, we need to meet the man who became the architect of one of history's most expensive mistakes. Why this matters. Every entrepreneur and investor needs to understand this psychological trap because it's still happening today. Louis Borders wasn't just any entrepreneur. He was the co-founder of Borders Books, a retail genius who understood customer experience. When he looked at grocery shopping in the late 1990s, he saw inefficiency everywhere. Long checkout lines, limited selection, the hassle of driving to multiple stores. His vision was simple: build a completely automated system that could deliver any grocery item within 30 minutes. But Borders fell victim to what I call the Infrastructure First Fallacy. This is the belief that if you build the most impressive, technologically advanced infrastructure possible, customers will automatically appear. It's the if you build it, they will come mentality on steroids. Amazon started by selling books people already wanted from Jeff Bezos' garage. Webvan started by building a billion-dollar system for a behavior that didn't exist yet. How this applies to you. Before you invest in any company, ask yourself, are they building infrastructure to serve existing demand or hoping to create demand? The difference is between success and spectacular failure. So Borders had his vision, and in 1999 he found investors who shared his delusion. But the numbers I'm about to show you will make your head spin. The cash burn engine. We're talking about a company that was spending money so fast, they could have bought a new Ferrari every single day and still had cash left over. Why this matters. Understanding how Webvan burned through cash teaches you to spot the warning signs of unsustainable business models. Their flagship warehouse in Oakland cost $35 million to build. This was a technological marvel with 4.5 miles of conveyor belts and robotic systems designed to serve 8,000 orders per day. The problem? They were lucky if they got 800 orders per day. But here's the insane part. Instead of proving the model worked in Oakland, they immediately started building identical facilities in 25 other cities. Each warehouse cost between $25 and $40 million. They bought custom delivery trucks and hired thousands of employees. In their peak quarter, they were spending over $160 million while bringing in just $37 million in revenue. For every dollar of groceries they sold, they were spending more than $4 on operations. How this applies to you. The most successful investors always look at unit economics first. Can they make money on a single transaction? If a company can't prove profitability at a small scale, throwing more money won't fix it. But the spending was just a symptom of a deeper problem. What I'm about to show you is a visual representation of one of the most expensive cases of wishful thinking in business history. Market versus management delusion. I'm about to show you a chart that perfectly captures what happens when reality collides with delusion. Why this matters. Learning to read market signals versus management promises is crucial for any investor. Picture two lines on a chart. The first line is Webvan's stock price, starting at their IPO in November 1999. It opens at $15 per share, spikes to over $30 on day one. The company is suddenly worth over $8 billion. But then reality sets in. As quarterly reports show massive losses, the stock begins its death spiral. By July 2001, when they declare bankruptcy, it's worth 6 cents. Now here's the devastating part. While the stock price plummets, their capital expenditures keep going up. Quarter after quarter, as the market screams that the business model is broken, management keeps spending faster. This creates the cash burn engine, a perfect X pattern where market faith and management spending move in opposite directions. The market was sending every signal to stop, but Webvan's leadership accelerated their spending. How this applies to you. When the market and management disagree, bet on the market. Stock prices represent the collective judgments of thousands of people putting their money at risk. But here's what makes this tragic. The idea wasn't completely wrong. A company launched over a decade later and did everything Webvan did wrong, right. The right way to build the future. What I'm about to reveal will completely change how you think about innovation and business strategy. Why this matters? Understanding the difference between Webvan's approach and what actually worked helps you identify real opportunities versus expensive fantasies. In 2012, 11 years after Webvan's collapse, Instacart launched with the exact opposite strategy. Where Webvan spent nearly $1 billion building automated warehouses, Instacart built an app. Where Webvan bought thousands of trucks, Instacart used freelance shoppers with their own cars. Instacart started with minimal capital, tested their model in one city, proved it worked, then expanded gradually. By 2021, they were valued at $39 billion. This is the difference between infrastructure first that killed Webvan and customer first that built Instacart. Webvan asked, how can we build the most impressive system? Instacart asked, what's the simplest way to solve the customer's problem? How this applies to you. Always ask yourself, am I falling in love with the solution or focused on the problem? The most successful investments solve real problems in the simplest way possible. And that brings us to the psychological trap I promised to reveal. The exact mental mistake that turns smart people into financial arsonists. The psychology of expensive dreams. Here's the secret that destroyed Webvan. They fell in love with their own vision instead of their customers' reality. This is confirmation bias on a billion-dollar scale. When you're building something revolutionary, it's easy to interpret every failure as validation. Low customer adoption? We're ahead of our time. Massive losses? You have to spend money to make money. Plummeting stock price? The market doesn't understand our vision. Webvan's leadership became psychologically incapable of admitting they were wrong because they had invested their identity and investors' money in being right. They were trapped in the visionary's paradox. The more revolutionary your idea, the easier it is to dismiss criticism. But successful visionaries are obsessed with proving themselves wrong. They test small, fail fast, and pivot quickly. Expensive dreamers are obsessed with proving themselves right, no matter the cost. Jeff Bezos started Amazon selling books from his garage because he wanted to prove the model worked before scaling. Webvan's founders started by building billion-dollar infrastructure because they skipped the proving phase entirely. In a world where AI startups raise hundreds of millions before proving their models work, where crypto companies promise to revolutionize finance without sustainable revenue, the Webvan story is more relevant than ever. The next time you're evaluating an investment or starting a business, remember the billion-dollar ghost of Webvan. Ask yourself, am I betting on proven customer behavior or expensive dreams? Am I building infrastructure to serve demand or hoping infrastructure will create demand? The market is littered with companies that built impressive solutions to problems nobody had. Don't let your money become fuel for someone else's expensive dream. Focus on simple solutions to real problems. Test small before you scale big. The most dangerous phrase in business isn't, "This will never work." It's, "This is so revolutionary, of course it will work." The future belongs to those who can tell the difference. Let's turn the lens on you. Have you ever caught yourself falling in love with a big idea before proving it actually works? Drop a comment below. What's one business or investment decision you now realize was based more on vision than validation? Let's learn from each other's expensive lessons. But here's the wild part. The same mental model that sank Webvan is the one that made Amazon an empire. We've only scratched the surface of how business psychology builds or breaks fortunes. There are more traps like this one, and more patterns of how real wealth is built. Luxury, freedom, and success are closer than you think. Don't just watch, take your next step. Choose our latest insights or a curated favorite, both waiting for you on your screen. This is The Wealth Project. Deconstructing wealth, transforming your future. Subscribe, get the rulebook, and remember, you're now part of the exclusive club, Playing to Win.